In August of 2024, CMS, or the Centers for Medicare and Medicaid Services, put out a plan that essentially insurance companies in the Medicare world would be able to opt in or opt out of, that essentially could be treated almost as a bailout in response to the Inflation Reduction Act that the government themselves put into place. It's amazing to me as an insurance specialist, as somebody that works with Medicare beneficiaries for a living, to kind of see this entire thing unfold. If you've been following our channel, in 2022, the government passed the Inflation Reduction Act, having to do with a lot of things dealing with our economy, but a big portion of the Inflation Reduction Act had to do with Medicare prescription drug coverage. There were things in there like capping Medicare prescription drug companies from being able to have the member responsibility for prescriptions go above $2,000. There were things in there about the federal government negotiating prices on various different expensive, high-cost prescription drugs with pharmaceutical companies, and a galore, right? We've done videos on this channel specifically about the Inflation Reduction Act and everything that it entails, but one thing that was predicted the first day the Inflation Reduction Act dropped, and we were capping all of Medicare Advantage that include prescription drug coverage and individual Part D prescription drug plans at a $2,000 cap. Everybody that had any sense of understanding of Medicare prescription drug coverage predicted that once this thing kicks in, and it will kick in January 1st of 2025 on the $2,000 cap, that prices would go up, prescription drug co-insurances would go up, deductibles would go up, and formularies would shrink in terms of the amount of prescriptions that they would actually be able to cover. Why? Because costs need to be cut somewhere anytime an insurance company ends up getting squeezed. So in August, we will kind of dive into exactly what this bailout means, what it has to do with anything, and why it matters, and what you need to know going into open season or open enrollment, or the annual election period, also known as AEP, for Medicare beneficiaries. So if we look at this screen, I believe that this little summary provides us a very good indication of what is actually happening. So I'll just kind of walk through it with you. In August of 2024, the American Action Forum, called CMS, the Centers for Medicare and Medicaid Services, planned for Medicare Part D a bailout that would funnel $7.2 billion of taxpayer money, by the way, to insurers to prevent premium increases before the election. Okay? The plan is marketed as voluntary, but the forum says that all insurers must participate to stay competitive. The plan includes 3 elements, okay? So if you're not following, what this means is the government is allocating essentially $7.2 billion that they're putting towards essentially providing a subsidy, a little bit of a backup for these insurance companies to be able to help them not lose their shorts as much on these claims. And which in point, if an insurance company opts in, there's certain requirements they have to meet to prevent their prescription drug coverage and their prescription drug plans from deteriorating too much and impacting Medicare beneficiaries. It's amazing to me that this was passed, and we knew this was coming for 2 years now, but now here in August of 2024, now they're stepping in and realizing that it's going to have impact on our Medicare beneficiaries in the United States of America. Just truly shocking to me that it got all the way here. Everyone that was be in the know-how has been publicly predicting that this would be a disaster for the majority of Medicare beneficiaries come January 2025. But here we are. Now they're realizing that they need to do something about it to fix the problem that the government themselves created. So this is essentially what this entails. These are the terms that the insurance companies have to abide by in order to get some of this extra funding. Okay. First things first is premium reduction, a $15 reduction to the base beneficiary premium for all participating standalone PDPs. What this means is there's essentially a base premium that is set by CMS every year that these insurance companies have to follow. This reduces the base premium essentially of what the maximum can be for a various amount of things. This would cost the federal government almost $180 per year for each member of the standalone Part D plan without a low-income subsidy. This next part is relatively important. Premium increase limit, a $35 limit on the year-over-year increase for the Part D total Part D premium. What this means is they're essentially capping these insurance companies from raising a plan for an individual by more than $35 limit on the year-over-year increase. Risk corridors. Changes to the risk corridors to share more government risk for potential plan losses. What does this all mean? It means that these insurance companies that are opting into this program may not see as big of a hit on the benefits for the prescription drug coverage as we might have originally thought. I still do believe we are going to see a relative deterioration with a lot of plans on their coinsurances for brand names, their deductibles, on their formularies. And I believe you'll see this on Medicare Advantage plans in many areas and Part D prescription drug plans in many areas. However, it might be not quite as severe as we would have thought because the government's stepping in and throwing money at the problem that they created. Now, is this a permanent solution? Probably not. It's probably just putting a Band-Aid on a much bigger problem, and it might be something that we have to deal with going forward for years to come. But if there's any light at the end of the tunnel and any positive sense with this, it's probably that it's slowing down the impact on a one-year basis, essentially, right? It's going to have some impact this open enrollment, and then it might have a little bit more impact next year. So it's kind of breaking up the impact on a yearly basis. That way it's not everything all at once. So that's probably a positive thing. But needless to say, the Inflation Reduction Act will help a lot of Medicare beneficiaries that spend over $2,000 a year in prescription drug costs. However, the majority of people do not. So anybody that's not spending $2,000 a year right now in Medicare prescription drug copays will likely get closer to that $2,000 number than they ever have before, assuming they take prescriptions. If you take no prescriptions, then this might not apply to you. But anyway, let me know what you folks think about this. Do you think this is good? Do you think this is bad? Do you think this is government incompetence? Do you feel like this is strictly to make it look like they're doing something positive for the election? I'd love to get your thoughts on this. Comment your thoughts down below. We'd love to have a dialogue with you. If you found this video helpful, educational, insightful, to kind of keep you posted on what's to come with Medicare open season, please drop a like on the video. It helps more people just like you find the information who desperately need to hear this information. Make sure to subscribe. We put out weekly information, videos about your Medicare. We'd love to be able to have more dialogue with you as we go. And without further ado, everyone, we'll see you next time. Thanks so much for watching, and happy Medicare.